It's time for the big three. Three stocks, three charts, three trades. Rick Ducat will take us through the charts. Here to take us through the trades, Alan Knuckman, bullseyeoption.com. Great to see you both. Alan, we've had so many headlines. I know you do a lot of technical analysis, but you must be hearing and seeing and watching this market. What is it telling you lately?
Well, I follow mainly money flow and price, obviously, but it's not telling me anything new. 2023, 2024, I was very bullish, and I'm very bullish in 2025. The best thing that we've seen is what the market hasn't done. We've had all kinds of opportunities that could have shaken up the markets and hurt this trend, but it's reacted very positively. And a breakout here above this 6,100, get on board or get out of the way.
So at this point now, following money and price, and you said, and it's still looking good. First up, you have American Superconductor, AMCS. Tell us a little bit about this story.
Well, looking at American Superconductor, it's come back to its breakout. Now, the bigger story is Intel. Now, Intel is up another 10% today. This is a stock that I think is going to benefit from the regime that we're in right now, and this idea of, onshoring. So American Superconductor had been trading here between 25 and 30, broke up, went to 35, came back to this breakout at 30. So that's really important, giving us a second chance. A breakout of this overall range from 25 to 35 targets 45. So there's a lot of upside in this stock. We're about 31 right now. So I'm looking at a June option, a June 25 call. Again, that super support point. I'm seeing my money flow. That's my indicator that I follow. I am seeing the leverage long accumulation. What that means very simply is options. Over my shoulder here, options accumulation. Now, some smart money is building positions using options, and that's the best way when you've got a high probability opinion, because you're going to get the best payoffs. So that's what I see with my indicator, and that's what is setting up for another move in this stock again.
All right, AMSC. Let's see, right around the unchanged line today. What do you think here, Rick?
Yeah, not unchanged. Recently, though, we've had some big moves here. So we can see that if we go back a little bit further, there's one key area on the chart that I want to call attention to first, which is this area right here near 2480 that was around where we repeatedly topped out during a horizontal consolidation. And there was one notable outlier, but price quickly retreated back within that boundary. Then we had our big push to the upside, double top near 38. That second peak gives us this shorter term white trend line to consider sloping downward here, but we also have an accompanying upward sloping trend line here in white. So more of a triangular shape in which price is compressing here. Now, though, look at the more recent activity. We had a big push to the upside on earnings on extremely heavy volume. RSI crossed above the 50 midline. Price crossed above another more recent smaller double top here near 3012. Now we had our breakout. Now we have retreated and bottomed out near those old highs. A very common situation. The old resistance has potentially become new support here. I'm not saying that's going to happen, just this is the kind of setup that many people try to look for here. So 34, right about there, would be Allen's break even. That's about our best close that we had recently after earnings. So that trade would be looking for a move above that level here. Now, if we were to look at standard deviation channels and volume profile, we can see that the +1 channel comes in very close to our old highs, so potential shorter term resistance at that level here. And then to the downside, if we were to break through 30, this is the first point to watch. There's a volume node and two of our moving averages between about 28 and 29, Nicole.
Yeah, look, a lot of excitement around the earnings, better than expected numbers. I saw a price target too of $39. It's at $30 today. A price target from Oppenheimer with an outperform. So those earnings with better than expected financials, that was actually at least one boost, but then it's, drifting off that big move. So final quick thought, Alan.
It's range bound. It came back to its breakout, gives us a second chance. And again, when it comes to this sector, look at what's happening in Intel. It's an American Superconductor surge. Even though this has the name American Superconductor, this is also going to benefit from what's happening.
All right, let's check out Pfizer next. This chart went from $31, $24. What a sell-off this has seen. Somewhat painful for shareholders. Some of your thoughts on where this could be headed? It's been getting some FDA approval recently for cancer treatments. Is there some upside here?
Yeah, it's an unloved stock, and what I look for that bottoming is I look for that sentiment shift via that bullish divergence. It made new lows, but not new highs and implied volatility. That's a sign that a sentiment shift is happening from a price standpoint. It gets some short covering, feed on itself. We've been between 25 and 30 for a year. 27.5 is an important midpoint. If it gets to that, it could pop to the range top at 30. But in the bigger picture, like I said, we've been between 25 and we're about 25.50 right now. So we're down at that support point. We've got a little bit of a bounce, but I'm seeing that option money flow again. We have a tight coil between 25 and 27.5. So that's important. Breakout to that 27.5 is very key here. The way to play a June option, June is, a plenty of time in this play. The 23 calls trading for about 3. It's $2.50 in the money, so the expiration break even is 50 cents higher. And I love the money flow into this stock. Once again, that smart money accumulating long positions in options.
Okay. What do you think here? When you look at the technicals and do some analysis, Rick, your thoughts?
Yeah, so when we look at Pfizer, we can see one that has had a bit of a fall from grace, to be sure, because we had these highs near 31.54. From there, a notable decline. You could draw a line of best fit, kind of cutting through this price activity here and here. Mostly pretty consistent. We did have a bit of a push to the upside there, a little bit of a false breakout, but for the most part, we've stayed pretty closely to this trend line. We also could draw a trend line here in blue, starting at those lows, just near 24.48. However, our blue upward sloping trend line has been overwhelmed by the bears here. We have fallen below it here. We did not touch this green line here, 25.06 quite yet. That was our recent low point here. So perhaps that could be a brighter spot here, but momentum is struggling. We are below the 50 midline. We are below our red trend line here. So now as we consider our price activity here in the light of our standard deviation channels and volume profile studies, we can see here is a key point. So not only does it contain our two moving averages, yellow 21-day and orange 63-day, it's also our volume profile point of control. So 26 to like 26.50 could be an important resistance point now that we have kind of given up this key area here. To the downside even further, the -2 standard deviation channel matches up fairly closely with the extreme lows. So around 24.30, 24.50 or so, that would be kind of the danger zone to keep an eye on to the downside here as we look at this one.
Yeah, you watch the danger zone. You got to watch that, right, Alan?
Well, we have limited risk options. Limited risk options. We're paying $3 for an option, and if the stock gets to 29, the option gains 100%. Just a modest move produces big gains, and you know what the key levels are to keep an eye on, but you've got an option to ride through the ups and downs and sleep well. I call these lifestyle options. I don't have to do anything. I know what my maximum risk is, and I know where I'm looking to get out if it moves for me, and we're going to see how it develops over the next 4 months based upon what I see in money flow.
All right, next up, Barrick Gold. It's been gaining after its earnings. Also, it did initiated with a buyback, $1 billion buyback program. 1 year, a great performer, up 18%, though of late off the highs. Let's see what, Alan, first, your thoughts on Barrick Gold today.
Well, obviously, gold overall continues to make new all-time highs, closing in on that $3,000 an ounce level. But Barrick Gold has not participated. It's been the weakest of the gold miners. Gold miners, if you look at GDX, we've talked about that. I know we've done that trade in the past, has done very well. But it's just recently that Barrick Gold has started to participate, and the earnings provided that catalyst and a big boost to the upside. But what we're seeing here is this money flow. It's money flow here just recently. People are starting to pay attention in this stock that's undervalued. The PE is 14. And you've got to remember that GDX, the ETF that tracks the gold miners as a basket, is still 30 or 40% off its all-time high. So there's a lot of upside in the miners that have the gold, and there's a gap at 19. So if we can fill that gap, then we're going to see a pop up to that 21 range top. We've been in this range. I'm looking at the $16 call. The $16 call is trading for about 275. Barrick Gold's at what here, 18.25 or so. So it's $2.25 in the money. Again, expiration break even's 50 cents. And if we get to 21, that option's worth, 4 or so. So, I'm sorry, 5. So that option doubles in value. So it's about math. It's about probability. It's about following the money. And that's what I do.
All right, and the high was 21.35 last fall, and it has had an incredible run and has had some great momentum over the last month, up about 17% in 1 month. And let's have Rick take a look at the technicals.
Yeah, I think I had my eye on some similar levels to Alan here. So the gap that we were discussing around here, 1875, 1877, that lines up pretty closely with that break even on the trade. 21 would be roughly up here near those highs. We topped out at 21.35. So those are some of the notable price levels we were just discussing there. Now, more recently, we've seen acceleration of trend to the upside. If you notice our moving averages, you can see that the short 21-day EMA in yellow is accelerating. It's closing the distance between its slower moving peers there. It's about to cross over the orange 63-day EMA. As a trading signal and as an entry signal, not super good, maybe doesn't work that well, but it's an easy visual way to see that the trend is starting to improve here. Now we can see as well that RSI has crossed into that overbought area, over 70, so typically regarded as a sign of strength as price is hanging on to its close above the purple 250 2-day EMA, as well as this series of old highs near 1775. So for right now, it's looking like the bulls are in control in this name for now, and the point of control, our area of heaviest trading, coincides roughly with kind of our moving average. So between 1675 to like maybe 1750, there's a lot going on in that area right there. So this could be a supportive area to consider to the downside. Now we find ourselves at our yearly linear regression line, our line of best fit, our idea of fair value. We're pretty much right on the money there. If we do manage to fill our gap, the +1 channel, pretty close to this volume node here, that would be right around 20 or so.
Okay, thank you, Rick Ducat. Great charts. Alan Knuckman, final thoughts?
Well, 30 is where Barrick Gold was just back in 2021. So again, it's all about risk reward, and you've got to love, obviously, the bull trend in gold. It could have some profit taking at any time, but this is a stock that has a lot of catch up to do with a limited risk play.
All right. Nice to see you both. Alan Knuckman there at the SIBO and Rick Ducat on the charts. Thank you for the big three today.